And what impact would that have on Facebook shareholders ultimately? Very little, or 3%, 4%?
It's hard for me to predict the impact on the Facebook shareholders, but I think there's been any number of double-digit billion-dollar acquisitions, and I don't know that the downside, when they haven't worked out, has been totally, detrimental, or has been detrimental in any way to the company. So I think it's one of those calculated risks if the business continues to execute on the mobile advertising opportunity, the mobile ad network that they've been testing inside of the core products, and they're looking for something to basically disrupt themselves with on mobile, which is clearly WhatsApp's trajectory and what a lot of the guys like Line and Kakao are doing. Yeah. I don't know that there's a lot of downside to this, other
David,
than ego.
What are your thoughts on it?
Yeah, Facebook has so many businesses, and businesses that are that big can absorb a lot of mistakes. I don't think this is a mistake. I think they're going to be able to monetize WhatsApp incredibly well. But at the end of the day, for Facebook and Facebook shareholders, I think it's a statement on the strength of Facebook and what they view as their future.
Jonathan, any thoughts on WhatsApp?
I agree. I think it's also an anomaly. Like, this is not a typical acquisition, obviously, and everyone's talking about it, but it's so abnormal. I mean, a month ago, was it 2 months ago, when Nest got acquired, like $3 billion was the biggest number in the universe. And so now we're looking at something so high. In terms of, its strength, I also credit Zuckerberg in doing something like that.
Is this going to be the start of a massive M&A, tidal wave, a tsunami of acquisitions? We saw Marissa buy, I don't know if she's up to 40 or 50 companies now. What the exact number is, I know it's over 30, because it felt like it hit 30 in the first year. Now those were mostly acqui-hires, 10 to $50 million range. But what do you guys think? Is this the future? We're going to see a ton of acquisitions?
I think people are opportunistic and companies are opportunistic. If things are viewed as available, obviously not necessarily at a bargain price, but if things are available that are accretive to the underlying business, they'll buy them.
I think more of the larger companies are going to start rolling out small teams, like Facebook's Paper app, for example. Like acquisition, I don't really see more companies being acquired more than normal. But I certainly see some of these larger companies really putting dedicated teams into creating these new products. I think that's going to replace it.
Yeah, I might go a little bit more controversial and say, there's probably going to be a ton of M&A, especially if you think about mobile apps. Maybe we're around the time when URLs first got figured out, right? And the opportunity to monetize a URL, right? Who would have thought business.com would sell for $7 million 10 years ago, right? And so what is the value of a mobile app that has someone opening it, or has a large percentage of their audience opening it every day, in a world where you can't get discovered through normal means like search?
We had Andreessen Horowitz say they weren't interested in consumer companies until maybe the B round, and it was proven. And they pulled back on that statement a little bit, but it sounded like that was actually the strategy. You guys have a different strategy. You guys all like to invest early in consumer, which is highly risky. How do you make a decision on what to invest your time and money into on a consumer basis? Because it is so fickle.
Yeah. Well, the consumer market is a huge market, obviously, and that's one of the things that we look at. But first and foremost, and you guys have heard this all, is the team. And we want a well-formed team that can execute on all aspects of the business. Launching into a large market, a target-rich environment, assuming that they're going to be able to hone in on the hottest target, a really good idea. And then we also want to look at, can they achieve, in the context of Dreamit, can they achieve an important milestone within the 3 months that they have inside of Dreamit? And then finally, can we add anything meaningful to help them achieve that milestone?
How many people have gone through Dreamit at this point?
People, about 600 entrepreneurs. And,
in companies, startups, yeah?
Yeah, launched 145 companies, and about a third of them have been in consumer.
And how many are still in existence or have gone on to raise what we'll call sustainable cash, a round or something? Yeah,
since so many are of recent vintage, 75 of those 145 are since 2012.
Yeah.
I'm going to give you what we've experienced historically. That may not project out completely, but about a third fizzle, about a third will bootstrap to some significant success, and about a third will take institutional financing.
Jonathan, what do you think are the qualities you look for in consumer when deciding to write a check?
Again, just to say a little bit about what you just mentioned is that the team is obviously so fundamental. And at Ludlow, we really look for crazy entrepreneurs. I mean, they have to be a little bit nutty in order for us to be interested in them. I mean, to the point where you're like questioning, like, does this person have any sanity whatsoever? But then there's that level of like, okay, they're crazy enough to do it. I think one big difference, though, now with consumer, is that a lot of these products are monetizable out the gate, and it's not advertising necessarily. Advertising scares me a little bit when that's the plan to monetization. And we have products in the consumer space that they're selling from day one, and that obviously mitigates the risk tremendously.
Bubba, what do you think are the signs when you're looking at a startup that you've seen result in success?
Specifically on the consumer early side, I think unpacking. If you want to invest before something has traction or before something has proven itself out, you have to unpack the team comment in my mind. And the way I unpack the team comment is: do you have a CEO, co-founder that is evangelistic, missionary almost, in their belief of the opportunity, in their proof that they have the energy, the stamina, and the perseverance to go through and break down walls? Second, you have to have them paired with an outstanding co-founder that is going to be able to complement their vision and their zeal with strong execution. And that takes a really strong-minded CTO that doesn't just worry about the engineering, but also oftentimes worries a lot about how the company's going to get from A to Z. What are all the steps along the way that the CEO has in mind? And then the final thing, besides this, kind of zeal, energy, the right co-founding dynamic, and then the third thing I think is really ultimately a team that has a process that understands that it needs to be resilient. Because in consumer, you can't manufacture a hit. You have to actually go through and test hypotheses. And so oftentimes when I particularly meet with consumer startups, I ask them, how many experiments did you do this last week? Right? And if they can tell me how many they did, that's great. If they can tell me how they're going to improve the number next week, I'm even happier. And when they tell me, here are the 10 theses that we've tried, and here's why they worked, and they're bite-sized and small enough, I get extraordinarily excited.
So you mentioned testing there. You're referring to lean startup methodology, just trying to learn something about consumer behavior every week as opposed to just building it and hoping for the best.
Yeah, I think there's always a balance, right? You don't want to ship a shitty product, right? I heard a great quote from a good friend, Andrew Chen. He said, you can put a viral loop on anything. So if you put a viral loop on a little piece of shit, we can all guess what happens. I prefer to find a team that is focused on finding that little diamond, but you could test that diamond in a lot of cheaper ways than waiting to build something for 12 months. At DFJ, we're very comfortable taking a lot of risk. In fact, that's why we back companies like SpaceX, Tesla, continuously betting before they've even proven themselves. I think we can do that same thing in consumer. It's just, again, about looking for the team that has that mentality and the capabilities.
And in Tesla's case, they did a great test, the Roadster.
Yeah. I mean, it was a little bigger, minimal
Slightly
viable
bigger
product.
test, a couple $100 million test.
But it went really freaking fast.
It did go very fast. How has testing in the lean startup movement affected incubators, accelerators? Are you looking at the teams like Bubba is and saying, what kind of tests are you running and teaching them testing? Or are they coming in saying, like, I've read Lean Startup, I know Eric Ries, I know Steve Blank, I'm going to just go test.
Well, one of the things that we're fortunate at, and I guess we select for it, is coachability. So we don't have that many entrepreneurs who come in thinking that they know it all.
Right.
So that's really important to us. We push it back even earlier than what Bubba was saying, in that we want to see them sell it before they build it. So we push the companies out into the marketplace as soon and as quickly as possible to get data points to bring back when they feel that they have a feature set that is of a product that the market wants, to build like crazy, to launch, learn, and then iterate. So we're pushing them out into the market even before they have a product in most instances to get that feedback. And in terms of looking at the founders' teams, we break it into A, B, C, D, and E. So we're looking for audacious, brilliant, capable, dedicated, and enthusiastic founders.
Awesome. Pretty easy to remember there. So what have you invested in, Jonathon, where you looked at it and said, this is in amazing results, and then the opposite looked like, hey, and you don't have to put the name on the second one, but looked like this was going to be amazing, and then just went sideways, and why?
Yeah. So one of the companies I'm most excited about we've invested in recently is called Ubeam. Actually, it was almost a year ago. We finalized the deal actually right backstage there.
Yeah.
This entrepreneur, her name is Meredith Perry. She's absolutely brilliant and does not take no for an answer. A lot of, we talk about trends a lot. A lot of the things we're seeing lately are this whole wearable trend. We literally had someone pitch us braces that are like smart braces, which I think sounds insanely dangerous. If you have some sensors in your teeth, you bite the wrong way and get electrocuted. But because there's all these wearables, you have to think of other ways to power things. So what UBeam is doing is harnessing ultrasound to actually charge all your devices wirelessly. So everyone in the audience right now, your phones, your computers, eventually, without any harm to your body, since we're using sound, would be charged. So I've seen this team go through iteration, prototype, and they finally got it, and it should be pretty large.
Does UBeam actually have a product? I mean, I have the Lumia from Nokia that you put on the tray. It's that type of technology.
No, so it's way different than that. The biggest problem with those things is that you still are anchored to something. You're still anchored to a physical object. So you have to have a case and you go put your phone down on something. You might as well just plug your phone to the wall. In this case, it's really seamless. I mean, literally my phone in my pocket right now would be charged without any disruption whatsoever. And it won't turn you into a mutant because it's just using sound again. It's not using some crazy microwave radiation something.
And UBeam will eventually put this product in a cafe and everybody's phone will be simultaneously charging?
Yeah, I mean, any public place you go, private, public, wherever you are, your phones, your computers, I mean, I don't want to set the bar too high, but if I do, she'll execute. She is incredible. This is going to be a big change to our normal behavior.
What's another company, without saying the name because we don't want to put anybody on the spot, but just describe the experience of investing in something, being tremendously hopeful as an investor, and then seeing it go sideways and what you learned from it.
I think I have this terrible fault, and it happens all the time, where if I get super pumped about a product, I think it's the next best thing, and if I'm not excited about it, then no one else wants it. And that's a terrible habit, and I've really worked over the years to try to curb that. So I have seen products where because I'm the perfect demographic, I assume everyone is the perfect demographic. And I learned the lesson the hard way a few years ago, and thankfully, again, trying to curb that zeal.
So, Bubba, same question to you. Something you just knew was going to work, and it did, and why? Yeah, when you were investing.
Yeah, so probably an example I could give before I joined DFJ. So, but is getting involved with Udemy. It's funny, we were just talking about
Udemy. Udemy. Is that a Founders Institute company?
It was a Founders Institute company, which is actually how I met them. I had coffee with them before there was a company, when it was 3 founders thinking about quitting their jobs.
Yeah.
And there was just something about each of the founders' story that I knew was going to work, right? You had 2 gentlemen from Turkey that had basically clawed their way out of Turkey into the States, into education, into opportunity through building software. And you had a third hustler named Goggin that is onto his next company.
What's the name of that company? I forgot.
Oh, it's Sprig. I think you're investors.
Sprig. Oh yeah, we happen to be investors. Everyone who's hungry tonight, eat Sprig.com. Sorry.
So, he left and started another one. So you're investors in the same,
I'm not an investor in Sprig.
Not yet.
But you saw these 3 guys, and you just knew they were going to find a way to make it happen. Again, it's that founder who had this vision, this perseverance, this just straight up conviction that they were going to break through any wall that was in their way. And then you had kind of this hacker mentality, this hey, we're going to try testing a bunch of things. We're going to pay for a poker course. Let's see if that works. We're going to pay, we're not going to pay for content. We're just going to go after professors. They just kept iterating, and now, it's a business that's got about 50 employees. They're off to the races revenue. It's something I'm really proud to have been there from the beginning of, and just had a gut, that it was going to work.
Is there too much money at work right now, and is it too hard for investors and accelerators to actually get in these deals, and entrepreneurs have too much money to deploy? I know that sounds crazy because there's probably a bunch of people here raising their rounds, but I've never seen in 20 years the ease at which people can raise $1.5 million with no board seat, no change in control, nothing, just 1.5 on a convertible with $15 million caps and go. And they do it in 3 weeks with 2 employees. I mean, is it too easy?
No, I think it's still actually really hard, as most of the companies here who are raising money would probably agree with. There is a lot of money available, but you still have to work awfully hard to get it. And in the accelerator world, we're not really worried about the deployment of capital in the A rounds and B rounds, because our job is to help the companies prove what they need to get there to attract that capital and to help them attract that capital. But I think it's actually a great environment to be launching a business, but you still have that valley. You have that valley between the seed and the A. So, it's tough.
So the A, the seed, easy, the A, ridiculously hard.
Yeah, I think A rounds right now are tough to come by. Seed, and there are two factors at work. One is the constant decrease in the cost of building the product and getting the product and being able to enter it into the market, and the availability of capital. So you have decreasing cost, more capital in the system, but it's still not easy to get there.
Jonathan,
If you don't mind, I just want to touch on the amount of money available, in the ecosystem right now. I think it's very, very healthy, and I'll tell you why. Because when it's easier for an entrepreneur to raise capital, it makes the venture capitalists work all the more hard to get into the deals that they really want to get into. And I think it's kind of flipping the stage where typically you had VC with this top-down mentality. Entrepreneurs often feel bullied and backed into a corner. When we see a deal now that we want, we go after it. Like there's like restraining order, and then there's like what we do to get into that deal.
Right.
And I think in the old days when money just spoke, it was a different mentality. Now it's really healthy that entrepreneurs get to actually, at least in the companies that have a very decent product, can take a step back and say, okay, let's figure out what money is the best for our actual company. So I think it's healthier for the companies for sure.
in the consumer space, what do you have to prove to get that A round and to get a venture capitalist to join your board? Because, correct me if I'm wrong, the money is one issue, but the board and actually dedicating your time to it, Bubba, you're going to be on how many boards? 8?
6 to 8 at most. Yeah, I mean, I think it is funny.
6 to 8 over the next 6 to 8 years.
Yeah.
So one a year. I mean, basically, your dance card is how full now, and how many more slots on the dance card?
For me personally, I have
Yeah.
6 more slots, I think, 4 to 6.
So you've
I've taken 2 board seats.
Right.
So, well, and to your question around the time, I think that is one of the most challenging aspects when you meet an entrepreneur you want to fund, is having the conversation that, because money is effectively a commodity, right? I think in the funding environment for a top tier team entrepreneur, for either the $1.5 million or if they have the right amount of traction, which is very debatable for an A, but whatever that traction is, I've heard numbers in the B2B, hundreds of thousands of dollars a month in MRR. In consumer, certainly you want to see like 10 million monthly active users kind of numbers, but even that may not be enough, right? Because the bar is constantly changing. You have to look at engagement. But for the folks that have the bar of engagement, have gotten the business proof to an A, it's great that they don't need, or that they have all the leverage and money as a commodity for them. And you said it right, it's very hard to get money still, but when you have the proof points, making the case to say, hey, I'm in a business too, right? My business is, for better or worse, I've become an investor, right? And for me, it's always funny to say those words out loud after being an operator for so many years. But part of the reason I joined DFJ is the focus on kind of entrepreneur-centric, founder-centric, right? Many of our entrepreneurs come back multiple times because we stand by them, we treat them right. And I think making sure that they understand they're not just getting money, they're getting time, but they're also getting a value system from their investors,
And perhaps,
right? And
I'm sorry, Bob.
oh, sure. And that value system, I think, is actually the thing to diligence the most. And you only see that through direct interactions and through data and reputation that comes out. But, that's the non-tangible asset. And so when I have to negotiate a deal, I oftentimes have to talk about time I'm willing to invest and try to help them see the reputation and the value system I bring by introducing them to everyone in my network. Because it's not about the money. Someone's always going to be able to beat me on terms, even though I have a large checkbook, because I have to be prudent as an investor.
So you say, hey, let's put the terms and the valuation on the side for a second. Let me tell you how many hours per week I'm going to put into this. Yeah. That's your approach?
I actually put it as, what are the 2 or the 3 goals you can sign me up for? let's talk about what goals. Why do I think I can deliver those better than anyone else, right?
Right.
If it's in the case of the first check I wrote, Highlight, we're really focused on the product. It came out, it launched with a lot of hype at South by Southwest, now almost coming up 3 years ago.
Highlight is the proximity social network.
It's a location-based social network.
Right.
The CEO has all the characteristics, the founding team has all the characteristics I outlined, but they're frankly in figuring out the right product, right? And they have built something that has caught people's imaginations, has deeply engaged users. But I think, with a 2.0 launch, you saw a completely rethought product, and I got to really help them with that. And that was one of the things when he had his choice of investors, he really looked to saying, hey, I want someone that can talk about product with me.
Yeah.
Right?
To demonstrate the point that I think we've all touched on about the difficulty of getting that early money. Dreamit has two components. One component is the accelerator, and then there's a fund which invests in the companies after Dreamit. And the approach of the fund is the fund will take up to 25% of the first post-Dreamit round. And part of the reason for that is because it now enables the entrepreneur to go out and say, I'm raising $1 million and I have 250,000 committed, which is to address that difficulty of getting that early money by giving the later investors, the additional investors, the comfort of knowing that there's significant money coming from the Dreamit fund into the company.
So you're an anchor for those companies. How do you deal with we're an anchor for these, but not those companies that came out of Dreamit?
Yeah, we're very conscious about negative signaling.
Yeah.
So in that first round post-Dreamit, we anticipate that we are going to participate in all of them unless the founder is in jail.
Right.
So we're going to really, the model is to participate in all of those rounds post-Dreamit. For the LPs in the fund, it's a very cheap option to buy, number one, because with it comes pro rata rights going forward so they can stay in the deal. And the return profile has been extraordinary so far, 2.65x in 10 months.
So what do you guys think is, and I'll start with you, Jonathan, is the benchmark to get your seed-funded consumer startup to an A round? What do you think you have to show in terms of uniques or daily active users, monthly active users, revenue, something that makes a VC firm in your experience in 2014 say, okay, this is worth considering, let's take a deep dive?
Yeah, so obviously there's no one right answer because if one product has 5,000 users who are incredibly engaged and paying a boatload of money to use that product, that's obviously very nice versus another product that could have 10 million users, like Bubba said before, but the actives aren't there. So there's no magic formula, but they have to very clearly articulate why one of those that you mentioned, why they're hitting it perfectly and how they're going to continue to scale that. So
if you had a small number of users, let's say at Highlight, but they were using it for 2 hours a day, you could hang your hat on the 2-hour metric, or if on Sprig, you had people, that's the food ordering company?
Yeah.
You had people ordering 7 times a month, you could say, hey, it's a small number of people, but they do order 7 times a month.
Yeah. Again, there's no one right answer, especially in the consumer space. Every product is so completely different.
I do think it's less thinking about, if I was to try to give you a generic answer, which I don't think I agree strongly with Jonathan, there is no generic answer. There is a uniqueness to every business, and it is, though, if you're deciding you're going to be in advertising, it's effectively, does the CEO and the team have a thesis now on what the business model of the company is going to be? And if that is like, hey, we're going to be advertising supported, that means then creating a large audience base as part of their seed round and showing that, hey, we can get to the next order of magnitude, which is, oftentimes 100 million to 500 million users, somewhere in there for a B, right? Right. And showing that they now know what they need to do and that they don't know exactly the answers, but they have the process that they're going to use to get from where their current growth is to the next level. Likewise, if it's a marketplace, saying, hey, we figured out, you heard Travis, he and Garrett were basically doing the two sides of the market. So being able to prove out, hey, we figured out how to get supply and we've figured out how to get demand. Now what we need to do is drive up the number of transactions. That would be an interesting level of qualification for an A. And then finally, you have the subscription services, even as a consumer, right? A Dropbox, an Evernote, whatever the next set is, where it's probably about conversion to paid. It's not even about the numbers. It's, hey, for every 10 users you put in, are you getting 1 user to pay? That seems pretty interesting. And you even see in the logic, finally, I just say, even if the top line numbers aren't there, another one that is very valuable is the level of engagement. And right, this is getting cited a lot now to bring it back to your original question around WhatsApp. right? 72% daily active engagement, right? The high bar used to be Facebook, right? Which was somewhere between 50 and 60%, right? They always said over half of their daily actives came by, and my assumption from a public data perspective is if it was over 60%, they would have said something over 60%. But WhatsApp at 70% was a whole different bar, and I think that's why I suspect the Sequoia team didn't ever let the deal get out to market.
Yeah, and a point which people have touched on the panel, and I think is important, is that there are so many different paths to revenue in consumer. So you could have a SaaS business, you could have an ad-supported business. Ad is really, really tough, and I think that we would all agree on that. And you can also use consumer to prove an enterprise play as well. So for example, a company that launched from Dreamit last fall, Drop Till You Shop, if anybody knows about it, what it is products, the price of products continually fall until the consumer selects the price at which they want to buy the product. What the consumer doesn't know is how many units are available and what the bottom price is at which it comes off the board and is no longer available. So they have a destination site going now, and the metrics are unbelievable. Average time on site is 30 minutes.
So you have people just hanging out there waiting, like gambling. I
Well-
love this. This has got like this. This is all my bad instincts. Like just sit there and gamble and wait till the last minute and grab it.
And you don't know when that last minute is. It really is a beautiful model, but what I love about it even more is that they have a destination site where they have product, and you can go on probably right now. There's a Drop Till You Shop, there's a sale going on, but they're using this to demonstrate the enterprise play. So this is, I think, the perfect, and my background is e-commerce with Monetizing, a company that I founded as well. This is the perfect way to move clearance merchandise for all retailers, I think. So they're able to prove out on the consumer side all of the metrics that they can take
So
to the
basically,
enterprise
from what I'm
side.
hearing from you guys is maybe don't try to make this really big at the start. Keep it small, but really work on the engagement of that user base as a strategy. Almost like really get really hot coals burning in your A, and then use in your seed round, and then use the A round to make a big barn fire.
I'd take it a step back even further, Jason. We encourage companies, don't take money. That's not the goal. The goal is not to take money. Once you have an investor, you now have a partner whom hasn't really helped you found the company. They can help you expand it. So don't take money unless you need it to either scale the company or it adds something very meaningful to the business. And I think you're exactly right at the next stage, which is you want the coals burning really hot. You want to hit at value creation inflection points. That's when you want to take in funding. And you can get very, very far. You should be able to get very, very far, unless it's some huge idea in some incredible market. Like there's a company here in San Francisco that's throwing satellites up into space. Okay, you need a lot of capital to do that. But
Assuming you're talking about Planet Labs, which is one of
Yes.
the companies we invested in.
Yes, I know.
What's the name of it?
Planet Labs. So they're,
Planet Labs, yeah, they're putting
They've
satellites.
launched 28 satellites, a constellation into Earth orbit, and they're getting ready to be able to deliver photography of the whole Earth every day, right? But that company actually started with a $1.5 million seed round.
Right.
Right, and has now raised an A that we led, and then most recently in December took a B, which is an interesting characteristic, and that was from Yuri Milner, and it was a huge round with a huge pre-money valuation, is that to go big, oftentimes you still need lots of capital, right? There isn't a cheap way to get a company public. I think a great experiment will be, ultimately, is could a SaaS business self-fund itself so that for less than $10 million of investment dollars could it get to a public company numbers? And I think that might actually be possible today. We'll have to see how it plays out over the next 3 to 5 years. But
Viva has done that.
Huh?
Viva did that.
Did Viva do that exactly?
Yeah.
I didn't look at the...
They went public, and $10 million was their total investment that they did.
All right, let's go with the last, my last question. What's the worst thing an entrepreneur can do when they're meeting, that they do often? Not like, well, you could actually do the question of, what's the worst thing you ever seen an entrepreneur do in a meeting? That's a good question. We'll do that one too. But also, what's the thing that entrepreneurs do often that disqualifies them from getting funding? Jonathan, do you think you see this over and over again where they do this and it just screws up their funding?
The easiest thing is when you don't know the answer to a question, just say you don't know. That's it. I mean, it does two things. One, it makes me trust that everything else you said, I believe you now because you just admitted when you didn't know something. And it's so painfully obvious when you don't know the answer to a question. I mean, you're presenting to people who also don't know the answers to many questions, so just relax and be honest. Worst thing an entrepreneur ever did was literally vomit while talking to us, but I don't hold it against the...
That was a scene from The Sopranos.
Yeah, well, see, the
I remember
problem
that.
is I'm coming out with a lot of secrets right now. I have this like insane irrational fear of vomit, so for me personally, this was like the most horrifying experience ever.
But literally, they're pitching.
They were pitching...
Was it
how
before
many-
or after you asked a question?
No, I think they just had the flu. They weren't nervous. They just like were like, a good question, and I was just like, and then they thought I was like so
Where did the
offended, but
vomit go?
really-
On the table or on the side?
No,
or?
on the side. It was horrible. And I felt bad because I run like, my little daughter, I run a coward in the corner because I'm so afraid of vomiting. But that was a bad experience. So please don't throw up if you're talking to us.
I think this is the kind of valuable tip we get here at lunch.
don't puke.
Of
Don't puke.
just
Be
how to
honest
be a
and
great
don't throw up.
entrepreneur. But no, the other one is a great one, which is when you don't know, hey, we don't know the answer to that, but it's something we're going to test. I wonder if you have any ideas about what a good test would be.
Write that one
And
down.
what I love about what Jason just said is never leave a meeting, never leave a discussion without saying, what would you need to see in order for X to happen? So,
Oh, yeah.
That's a great question. What tests would you run to do that? Use your time in front of VCs who tend to be really, really smart people who know lots of other people to find out what they would do in your shoes. And then ask them the next step also, which is, a great way for us to get to know each other better would be, is there anybody you could introduce me to who could help me with that?
Yeah. That question is good unless your product is terrible. Because I've had that situation
Right.
where the product is really bad, and they're like, who else can you introduce me to? And I'm like, well, I think before we get to introducing you to anybody, we might want to make the product
Yep.
a little bit tighter.
Yeah.
Or just, I've got this good friend, Bubba.
Exactly. Do you guys do that to each other? Do you send each other bad deal flow just
Never.
as like
Never.
to
Reputation
punish
matters.
each other? Like,
Yeah.
Although we are collecting,
I'm going to send you that fake vomit company, though.
oh no,
That I just saw on AngelList.
we do collect like the absolute worst pitches, and no one in this room would be at this caliber, I promise you. And because I want to publish a coffee table book in a couple years and just anonymize everything, but we've gotten some.
you could just pay them for their bad pitch.
Oh, some of them are so funny.
Yeah.
I hope the person's not saying in this room, but we really I want to advertise on the moon. And I like thought they were kidding, so I jokingly was like, so what happens if it's cloudy? And they're like, oh. And I'm just like,
In fairness, though, in fairness, when Elon Musk came to Draper Fisher Jurvetson for SpaceX, they did laugh at him as well. So
that
you
was
might.
Elon Musk. I mean, that's
Right.
a different individual.
Oh, this wasn't Elon Musk who once
No,
put
this
advertising on the moon?
unfortunately was not. If it was, we would have.
That sounds like one of his ideas.
I mean, Elon's original story was he wanted to put a greenhouse on Mars, right? He was so
Back
concerned.
up the biosphere.
Huh?
Back up the biosphere is how he said it.
Yeah.
Back
Wait.
up. Back up.
Back up the bio.
Oh, back up the biosphere.
Make a
yes.
backup
yeah,
of the
he wanted to
biosphere.
make a backup of the biosphere. Sorry, I wasn't there for the pitch. You obviously
I
you
heard
helped
it.
him craft the pitch, I suspect.
No, just told me that one.
So for me, the thing that is a killer, it's a very subtle point, but I want to find entrepreneurs that are chefs. And I often have the conversation of, hey, I'm at best, a financer to the restaurant you want to build. I will always come to dinner whenever you invite me and taste whatever you cook and give you very honest feedback on what's good or bad about it. But ultimately, you run the kitchen. You run the front of the house and the back of the house.
Right.
And I'm a guest when I'm in your doors. I will always be welcome. I will always sign up to do more work. But when people don't want to be the chef, right? That's the like a lot of entrepreneurs. There was you had this conversation with Travis earlier around what's the motivation, right? Uber's throwing off $100 million a week in payments to its drivers, which is insane. Why not go public? Why not cash in? And he's like, I have purpose. I have 2 lists. I want to go change the world in this way. I want to fix these problems. That core desire is what I would say is in the chef, and they don't want someone else in their kitchen.
Okay, and what's your moon vomit story? Oh,
My worst. So it's actually funny. My worst pitch was not a bad pitch or a bad story. It was when I was getting to know the Draper Fisher team, and Steve Jurvetson, who leads a lot of our far out investments, disruptive investments. He invited me to come see an investment of asteroid mining, right? And that was the only context I got. Was like, come see this, and I was like, is this an intelligence test? Like, I don't know, maybe this is part of the interview process, you have to ask 3 times to be let into some religions, and and I was like, okay, and I showed up, and 5 minutes into the pitch, I was like, I want to invest. And it was Pete Diamandis, who is doing Planetary Resources, and and is a brilliant, insight storyteller, and frankly, a gifted fundraiser. And it was a very unique experience just to realize how little I actually knew about what was possible and what people were thinking about.
That's going to work in the next 10 years. Go up to an asteroid, mine it, and bring it back.
If you knew the chances, you'd probably be able to make the investment.
Well, what do you think? I mean, you guys made the investment. You think this is going to actually happen?
I think it has a possibility. I just don't know. I don't know what I don't know. Like, this is one of those ones where the cost of space travel, is so much cheaper now. So they act like, we look at Planet Labs, 28 satellites in Earth orbit, at orders of magnitude cheaper than ever before, right? Like, what could be possible? I don't know, right? I think we're at a cusp of something very unique and different, and we've got an inside seat with SpaceX and Planet Labs right now.
What he should say now, though, is, but do you know anyone who you can introduce me to?
Yeah, exactly. Exactly. All right, listen, this has been a great discussion. Jonathon, Bubba, and David, thank you so much. Let's hear it for them with their honesty on how to get funding today. Well done.
Thank you.
And I'll bring out my next guest from Coin. Good job.
Thanks, brother.
All right. So